Ladies and gentlemen, good day and welcome to Modi's Navnirman Limited H1 FY26 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Navnirman. Thank you, and over to you.
Thank you. Good afternoon, everyone, and welcome to the H1 FY26 earnings call of Modi's Navnirman Limited. Today we have with us Mr. Mehak Modi, CFO and Adfactors IR team. We will begin the call with the opening remarks from the management, after which we will have the forum open for the interactive Q&A session. I must remind you that this conference may include forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. The statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. I now hand over the conference call to Mr. Mehak Modi for opening remarks. Thank you, and over to you, sir.
Good afternoon, everyone. It is my privilege to welcome you all to the Modi's Navnirman Limited maiden post-result conference call of H126. Before I begin, I would like to express my gratitude to all the investors, analysts, customers, partners, and the trust for the trust they've placed in us. Now I'll give a brief about the company. What is Modi's Navnirman Limited? So Modi's Navnirman was founded by my father in 2009. By my father Dinesh Modi, which we started real estate in 2009 by taking up smaller projects. In the last 15 or 16 years, we have been emerging as a premium real estate developer on the pillars of quality, trust, transparency, and timely execution. In these 15 years, we've already completed 15 projects. We have in pipeline 5 projects which are ongoing, and we have another 3 upcoming. Now I'll just give you a business overview currently of our journey and everything. Our journey began with a single goal to transform the urban living by creating spaces to inspire and enrich the lives of the common people. In over a decade, we have delivered more than 6 lakh square feet. We have around 7.5 lakh square feet of ongoing work, and the upcoming work is of more than 10 lakh square feet. Our major area of focus is Kandivali, Borivali, Malad, the western suburbs of the Mumbai, that is Kandivali, Borivali, Malad, Goregaon, Dahisar. Our focus has always been on redevelopment, a segment that only rejuvenates Mumbai's aging housing, but also offers sustainable, capital efficient, and growth opportunities. We as a company are very asset-light driven company. We go into a redevelopment basis wherein it is a partnership model wherein of the society gets an X percentage and the balance we get for sale. This allows us to maintain strong liquidity, and I'm glad to share that we are a debt-free company. For the FY20, I'll be going on to the operational and financial highlights of the first H1 results. The FY25-26 started on a strong note. During the first half, we have achieved a revenue of 83.39 crores. It has been an 128% year-on-year growth. Our EBITDA has been 16.04 crores, up by 164% of last year. And we have secured a PAT of 12 crores, up by 165%. I would just like to share that the PAT which we have shown in this H1 is the same result what we showed in the whole of the financial year last financial year. So we made a profit of around 12 CR last year, and we have shown H1 result of 12 CR this year. The performance only reflects not just growth in numbers but strength of our execution, financial prudence, and brand trust that we have built over the years. In this period, we have successfully handed over in the first H1 Rashmi Vasudev, a project in Borivali with a 90-unit premium residential tower, further enforcing our commitment on on-time delivery. Our major USPs have been on-time delivery, timely possession, good construction and management. The strategic milestones which we have achieved in the first half of 25-26 is we have successfully merged our subsidiary company of Shri Modi's Navnirman Private Limited within our listed company. We have been one of the first in the last few years in the fast track merger. We have been the first company since 2017 to get an approval within 3 months from the registration of companies. We are also in the progress of migrating from BSE SME platform to the main board of BSE and NSE, a proud moment that will enhance liquidity, visibility and credibility with the institutional investors. The company remains debt-free, reaffirming our disciplined financial planning and asset-light philosophy. We are establishing our own foundation, the Modi's Navnirman Foundation, to promote sustainability, education and community development, underscoring our long-term commitment to ESG and social responsibility. Now, I would like to give you as an industry perspective. The Indian real estate sector is on the cusp of a structural growth cycle, with urbanization expected to rise from 37 to 53% by 2050, infrastructure exceeding up to USD of 2.4 trillion. The sector is poised to become industry of 5 to 10 trillion by 2047. In this dynamic environment, organized and transparent developers like Modi's Navnirman Limited will be key beneficiaries. Our deep presence in Mumbai's high-demand western suburbs position us perfectly to capture this opportunity. Going ahead, our focus is going to be will remain on strengthening our redevelopment portfolio through strategic partnerships. We currently have been in discussions with near about 5 to 7 societies, wherein we are in the top 3 categories for getting selected as the preferred developer. We want to maintain our financial prudence and a healthy balance sheet. Our major focus is profitability growth with improved return ratios and embedding us to use the ESG and technology-driven processes to enhance stakeholder value. With a robust project pipeline, strong execution capabilities, and unwavering customer trust, we are confident of sustaining the growth momentum in the coming quarters. Now, before we open the floor for questions, I would like once again to thank all the stakeholders, ad factors, PR, investor relation teams, our partners, and the Chorus conference team, and every member of Modi's Navnirman family for the continued support. At Modi's Navnirman, we believe we just don't build walls, we build homes that embody our warmth, purpose, and progress. Thank you. Now I open the floor for any questions which anyone has.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait while the question queue assembles. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The first question is from the line of Vikrant Sahu from RK Advisory. Please go ahead.
Very good afternoon, team. So, just wanted to ask, are there any plans to enter new micro markets within Mumbai metropolitan region? beyond the western suburbs, and what are the criteria will drive these decisions?
Yeah, we are planning to expand into the other regions. We have ongoing talks with different regions of MMR, wherein we are placed at the top three categories and everything. So we are planning to expand our portfolio from the western suburbs to the other areas of MMR.
What is the current status of the approvals for your upcoming projects, and how do you manage regulatory lead times to ensure smoother execution?
Currently, out of three projects, two projects we have already got approvals of everything, and so in redevelopment we go by a society that once we get all the approvals, we tell the society to vacate, and then we demolition we start. So out of the three projects, two projects we have got all the approvals, and the vacation date was 1st November of this month. So both the societies have been vacated, and the demolition process and everything will start in due course within a month or within this month. And the third project has gone into an approval stage. It has started all the approval stages goes through BMC, the Bruhan Mumbai Corporation of Mumbai. So it goes from there, and all the approvals are received from the Commissioner of Bombay.
Okay, got it. One more question I have, like the company state it's a debt free in H1 FY26. Could you provide more on the balance sheet strength, working capital cycle, and planned capex, like the pipeline funding?
The pipeline funding, we are majorly the funding, we don't take any project finance, we don't do anything. Our major focus is being profitable in terms of delivering the projects, selling of the projects, and using that funds only to churn into the new projects and everything.
Okay, got it.
So that is how why we are debt free, because our major plus point is timely completion. So if our projects don't go beyond a timeline of 2 years.
Okay.
So in 2 years, the churning amount, the cycle of fund movements is very easy.
Okay, got it. Thanks.
Thank you. The next question is from the line of Vijay Pandey from Navnirman Wealth Management Limited. Please go ahead.
Hi, sir. Thank you for taking my questions. Couple of questions I will put. Sorry, but I have not worked on this real estate field, so my questions may be pretty basic. Just wanted to understand so our focus is mainly into western suburbs, or do you plan to expand to the other parts of Mumbai and also to other parts of Maharashtra?
We plan to expand to other regions of MMR as well. There are plans going to expand.
So our focus will be mainly on the redevelopment projects, right?
Yes.
So currently, what is in terms of the industry size or industry expectation, how do you see the current industry size for the redevelopment project in MMR?
See, industry size, you can't take a ballpark figure, because what happens is Bombay has everything in terms of redevelopment, construction, slum projects, MHADA projects. So to bifurcate just redevelopment becomes difficult. So, that just redevelopment is difficult in terms of sizing the portion of it.
Okay. I understand that part. Additionally, sir, in case, so how much time does it take for us to complete the order? So once we get the order for consider its building.
So I'll brief you with the process. So there are tenders which come out of societies for redevelopment. We fill in, we give our offers, then those are shortlisted. Then we do a presentation of what we envision for the project. That is how then we get selected. Once we get selected, then we sit with the society and take the approval from the society on the plan, and then we give out to the BMC and the concerning departments for approvals. Once that approval comes, that is where our major cycle starts of completing the project. So that once society vacates, till the time they don't come back, we finish the project with, we give them possession. That roughly takes around 2 years for us.
Okay. And so what is the time taken between the tender and the approval generally?
See, time, I'll tell you, once the society gets out tender and selecting the developer, it takes around 4 to 6 months from by the society standards, because they have to follow protocols, they have to take 15 days meetings and everything. So that takes 4 to 6 months. And once we submit for approvals, so the approvals from the concerning departments come within 2 months time.
Okay. And so in terms of the upcoming projects, we have 3 upcoming projects.
Yes, sir.
This should be done by FY27 or FY28?
Yeah, FY27, 28 it should be.
FY में जितना पूरे साल में जितना किया उतना उसमें हाफ ईयर में अभी किया.
Hello?
Sorry?
Yes, no, someone came in between, so I could not hear you. Yeah, that should be done by 28.
Okay. ठीक है. Thank you.
Yeah.
Thank you. The next question is from the line of Nimish Pandya, an individual investor. Please go ahead.
Hello. Am I audible?
Yeah.
Thanks for giving me this opportunity, sir. Sir, I have couple of questions. So my first question is, given the high interest rate environment and affordability challenges, what trends are you observing in bookings or in cancellations and also in price movements? Could you shed some light on?
See, the interest rates are not majorly affecting the sales and everything. In terms of oversupply being there, that hampers the sale. In terms of number of projects being developed, that hampers the sale. The interest rates don't matter a lot, because people want to take new flats, new opportunities, new amenities and everything. So post-COVID, the mindset wherein it was a saving mindset, you should not be spending that much. Post-COVID, it has drastically changed into spending on yourself and the amenities which you get and everything. So the market has changed, the market dynamics have changed that way, post-COVID. Second thing, you asked about the rate. The rates of Bombay are going to be this way. There will be no reduction in the price because the cost in Bombay is high. In terms of, if you were to see the cost which the BMC takes, the cost which society takes. So my acquisition cost is always going to be high. It is never going to be down. So the sale prices will never. It will see minor reductions, because once if someone wants to sell off early flats to generate capital, that might be the case. But other than that, there will be no drastic changes in the price. If you can say, there will be changes up to 5 to 10% changes, but not more than that.
Got it, sir. Got it. So my next question is, with H1 profits on par with full year FY25, how do you see the FY26 progressing? Could you outline your expectations for revenue or the PAT or margins, areas for launches and handovers?
See, so we are targeting to maintain this. The full year results will be going on these lines only. That is what we are assuming. It can be a little better, but not less than this, because we are going to be delivering one more project, probably this month, delivering it. So that will create a lot of impact on the sales and everything. The result will be a bit better than what it is because of the factors wherein we are delivering one more project.
Fair enough, sir. Thank you, sir. Thanks a lot. That answers my questions. And congratulations to you.
Thank you. Thank you so much.
Thank you. The next question is from the line of Shania Jain, an individual investor. Please go ahead.
Yes, please.
Hi, sir.
Hello.
Just one question. Like, what are your pricing assumptions for the upcoming launches? Like, do you anticipate any change in the average ticket size or a shift in product mix? For instance, towards more premium or mid-income projects?
See, so the 3 projects which are upcoming, we have in different areas. One is coming up in Daisur. So we have made the project in a way it is more of an affordable area. We have not gone into more of luxury, but we have gone into affordability. The one project, Rashmi Icon, which is coming up in Kandivali, that is a bit going on the medium luxury segment area. And the third project, which is there on the main link road of Malad, that is going into more of a luxury category. So we select areas, we see what demands are there in the areas, we analyze, we study, then we pitch it in a way wherein it is affordable for us to, sell off the flats and everything.
Okay. And just like one follow-up question, like following the merger and with the enhanced scale, like do you foresee opportunities to expand like beyond Mumbai or diversify into other segments such as commercial development or any like affordable housing or something?
Yeah. We are into all those things. So currently if you see, we are not a legacy business. We have been into real estate since 15 years. So to accomplish this much in 15 years has been a proud moment for us. So now where we have made a base wherein our hands into construction have been very good, now we are expanding into other segments of commercial, township projects, all those things we'll be exploring.
Okay. Sure. So thank you so much for answering all my questions once again.
Thank you.
Thank you. The next question is from the line of Akash Sharma, an individual investor. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. I have a few questions. First of all, sir, during the first half of FY26, we have, already achieved the profit levels which was in previous years. So, do you have any guidance for FY26? That at what levels can we achieve our top line and bottom line?
We are on target to achieve what we have achieved already. So the end should be in par with this result only. We'll be closing what we have shown in we'll not be showing less because in terms of we'll be completing one more project in Rashmi Celestia. We'll be handing over. So that will be boosting the results and the sales and profits.
Okay. I thought that usually the second half is robust for us because there are no monsoon, because first half it usually gets affected of monsoon. So I thought that H2 would be better than H1.
Yeah, it will be better. My only point is the monsoon does not affect the results or the sales nowadays. Monsoon point of view, I don't think there's any issue. So in Bombay, the whole year is season.
Got it, sir. And sir, my next question is like post-merger, do you see any opportunities for non-Mumbai expansion or diversification in suburban areas?
Yeah, we are looking into that as well. We are planning to expand into the suburban areas, other regions of MMR as well.
Okay. Can you give some examples of the areas that you are planning to expand in?
We currently have discussions in Santa Cruz. We currently have discussions in Thar, Ghatkopar as well. So different regions we are in negotiations with societies and where we are into the top 2-3 shortlisted developers.
Okay. And sir, usually in these areas that you have mentioned, there are many developers that are, either redeveloping the buildings or are launching large volumes. of new projects. So just want to know that how do you see the competition for this?
Sorry, I could not get your question. Sorry.
Okay. So basically, sir, the areas that you have mentioned, such as Santa Cruz or Khar, there are many developers who are either redeveloping the existing buildings or are, launching new projects. So just wanted to know how do you see the competition?
See, competition is there in Bombay, but it all depends on your execution skills. So that has been a plus point wherein in 15 years we have already executed 15 projects. Okay. So our execution skills in terms of other developers have been far better. And in Bombay, there are very few reputed developers with a brand name and with a track record of delivering it. So there are a few which will be comparative with us. Not all developers you can compare it with us because a lot of them are small scale developers, wherein they only do one project at a time or that way.
Got it, sir.
Yeah.
That's all from my side. Thank you so much.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Anuj Panwar from Family Office. Please go ahead.
Yeah, hi. Thank you for the opportunity. I just have one question. So, just wanted to check what are your pricing assumptions for the upcoming launches, and will there be any uptick in the ticket size or any change in the product mix? I'm saying when we compare the premium segment and the mid-income segment.
Sorry, the prices vary from the locations. So, the project which we are having in Daisar, we are targeting around 23,000-24,000 of the rate. The one in Kandivali, we are having an assumption of around our starting prices, our launch prices will be around 27,000-28,000. And the one in Malad, which will be coming up in the probably the first quarter of next year, will be starting at 30,000. So it varies from location to location, what we have in mind and what ticket size. Like I've already told, the Easter will be more affordable. The second project will be little bit into the luxury segment, and the third project is luxury segment.
Okay, understand. That was helpful. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Rohan Mehta, an individual investor. Please go ahead.
Hello. Good afternoon, sir. Am I audible?
Yeah.
Hi, sir. Sir, I just wanted to get some color on your land acquisition and the project-related pipeline and the plan for the next half of the year and maybe for the next financial year as well.
See, I gave, currently we have 5 projects ongoing, out of which one will be completed in the H2 of FY26. And we have upcoming 3 projects, out of which 2 we will be probably starting in the last quarter of this year. So these are the pipelines, and the third project is probably in the second quarter of next year.
Okay.
And in terms of land acquisition, we are going to a redevelopment model. wherein societies bring out their tender and then we bid into that process and then we take projects. So practically there are no land acquisitions. It is more of partnership with societies, you can say.
Understood. Got it, sir. So, sir, do you see maybe by the end of this year any sort of vision in terms of what would be the breakup of new development versus redevelopment versus commercial?
So what do you need breakup of? So I think that
in terms of our revenues, what kind of percentage of revenue would be coming from commercial versus from residential, and within residential also if there is a breakup between new development greenfield and society redevelopment?
See, I usually do society redevelopment. So the whole the revenue which is going to be booked, it is going to be booked from this only of redevelopment model. The new projects which we are going to start, we follow a percentage completion method. So the new projects which we are starting, those will not be coming into books probably this year, this financial year. They will be shown in books next financial year.
Next year.
So whatever the results and everything is going to go, the results is going to be based on the current projects which are ongoing. And we majorly do residential projects. Commercial we have around, not every project has commercial, but one project, two project. Out of the 5 ongoing, I have 2 projects with commercial and other 3 are purely residential. And commercial will also be in the range of around 10 to 15%.
Okay. And sir, in terms of geographical presence, we are primarily in the MMR region. So any sort of plans to expand outside, or how do you see how geographical presence pan out for the next year?
Yeah. We are into discussions for other regions of Bombay as well, with societies in Santa Cruz, Thar, Ghatkopar. So we are now starting to expand into other regions of MMR as well.
Okay. Sir, if you could just give your views on the competitive landscape, because even in redevelopment, what we see in the market, a lot of larger real estate developers are also getting in, because at least in the MMR, scope for greenfield is very limited. So redevelopment seems to be the flavor of the industry as of now.
Yes.
Do you see any pressure from competition, especially from the larger players also, apart from the smaller ones?
Not actually, because larger players deal into larger plot sizes. They will not be coming into smaller plots. So I'll give an example, 2,000 square meter to 5,000 square meters will be our range. 10,000 square meters is a project where larger players will come in, wherein you have your Lodha, you have Mahindra. All those go into that market. They go over there. They don't come into this. Plus, a lot of larger players don't also get into redevelopment. For example, Oberoi does not do redevelopment.
Alright.
So my point is, they do different segments of real estate. So there is a lot of Oberoi just acquires land and builds on them. He does not do that. So everyone has a different model, the bigger players.
Right. So then currently we are almost virtually debt free. So is there any plan to take on debt, maybe to take if there is sufficient project inflow, or do we plan to maintain the current debt levels?
We plan to maintain current debt levels. There are no debt levels actually.
Right.
So we are on that vision only, that we don't want debt. But see, you don't know what future holds for you. But as of now, what we see for the next couple of years, I don't see we raising any debt.
Understood.
Yeah.
All right. Okay, sir. All right. That's all from my side. Thank you for taking my questions and all the
Thank you. Thank you so much.
Thank you. Bye.
Thank you. That was our last question for today. We have reached to the end of the question and answer session. I would now like to hand the conference over to the management for closing remarks.
I would thank you all for joining us on this call and seeing our vision, what we as a company have for the next 2-3 years, and what we plan on to develop and take the company on better heights. So thank you to the Chorus conference team. Thank you to the iFactors team, and thank you to all the analysts, investors, private investors, and family offices to join us on the call.
Thank you. On behalf of Modi's Navnirman Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.